Dear finance professionals and students, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant. Daily news and updates for 9th March 2024. India plans to link duty reductions under the trade agreement with the European Free Trade Association to investments made by member countries like Switzerland, Norway, Iceland and Liechtenstein. These nations have committed to investing $100 billion over 15 years. The Free Trade Association is scheduled to be signed on Sunday, following its clearance by the Union Cabinet on Thursday evening. The Indian Banks Association and bank employee unions have reached a consensus on annual wage hike of 17%, a move that is expected to have a substantial impact on public sector banks. This decision will lead to an additional yearly expenditure of approximately Rs 8,300 crore for these banks, benefiting around 8 lakh bank employees. The wage hike is set to take effect from November 2022. India's growing semiconductor sector is facing a surge in demand for talent, fueled by new investments and the government's ambitious plan to transform the country into a chip manufacturing hub. The government recently approved $15 billion worth of investments into the sector, including from the Tata Group. There is a total demand of 40,000 to 50,000 employees across job roles in 2024, a 25 to 30% increase over last year. The sector is expected to see more than 8 lakh to 1 million job openings over the next 5 years. The Central Board of Indirect Taxes has asked its field formations to set up an internal mechanism to weed out duplicate notices to businesses and individuals for offences already being investigated by state goods and service tax authorities. As per an internal assessment, there are about 10,000 cases where taxpayers have received notices from both the central and state GST authorities. In a significant move aimed at bolstering India's International Financial Services Centre or IFSC, the CBDT issued notification number 28/2024 on March 7, 2024. This notification brings forth a crucial exemption from tax deductions under various sections of the Income Tax Act for units operating within the IFSC. The notification highlights that units within the IFSC will be exempt from tax deductions for a variety of income types, including interest, professional fees, dividends, and commissions. This exemption encompasses payments made by any payer to a qualifying IFSC unit across a spectrum of sectors including banking, insurance intermediaries, finance companies, and more. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.